Social Security, and Medicare. Government revenues are more stable and predictable than with the federal income tax because the consumption is a more constant revenue base than is income. The fair tax abolishes all of the current federal tax system and replaces it with one simple, visible, federal retail sales tax administered primarily by existing state sales tax authorities. The IRS is disbanded and defunded. The fair tax taxes us only on what we choose to spend on new goods or services, not on what we earn. It is fair, efficient, transparent, and an intelligent solution to the frustration and inequity of our current tax system. For more information, you can go to fairtax.org. Fairtax.org. I was reading a book about the fair tax by Neil Bortz. I really encourage you, if you're concerned about what's happening in our country and the taxes and what they're doing to us, get educated on what else is out there and what the options are. I think the fair tax is a very exciting prospect, and it's something that I would hope that you would learn more about. It's really important. We just can't continue to keep going the way we're going. At any rate, we're up against a break. We'll be back in just a moment. If you have a question, give me a call at 296-4464. That's 296-4464. Don't go away.
More financial strategies.
If you've missed any portion of today's show or you'd like to hear it again, simply go to www.790knst.com. Click on the On Demand tab and in the drop-down menu, select Podcasts to go to this weekend's show or Safe Money Strategies. You can also always listen to the show streaming live at 790knst.com. Thanks for listening. This is Safe Money Strategies.
Have you had enough of the market gyrations yet? Is a double-dip recession here or near? Hi, it's Glenn Beck, and I want to tell you about Susan Moore Vault at Moore Financial Strategies. If you're over 50 and you're concerned about your nest egg, you need to see Susan. She's been serving Tucson now for about 20 years, and she's never lost one dime of her clients' money. Excuse me? True. For IRA and 401k rollovers, Susan can eliminate your risk and ensure that your money is safe no matter what the market does. She can show you how to guarantee the safety and growth of your money for the rest of your life. Do your own homework with Susan and carefully decide how to manage your money. Do you want to bet on the market, or could your portfolio use some diversification to ensure some stable income no matter what happens on Wall Street? Talk to a true retirement specialist. The only one in Tucson that I've agreed to endorse is Susan Moore Vault. Call Susan now at 296-4464. That's 296-4464.
More financial strategies.
All right, we're back, folks, for our final segment. You know, I have folks come in, and almost invariably I hear a lot of the same questions and comments. So, for the record, I think I'm going to just address some of the things that people ask me about, and about annuities particularly. You know, when it comes to retirement planning, providing safety and protection of principal becomes critically important for retirees. Annuities can provide safety and growth on the same dollar at the same time. Information about annuities, however, is often negative, misleading, or inaccurate. So I want to address some issues that people bring up to me all the time. For example, people use a broad brush when they think about annuities. The thing is, all annuities are not the same. There are four kinds of annuities: immediate annuities, variable annuities, fixed annuities, and fixed indexed annuities. They all achieve different goals and address different planning options. However, variable annuities are annuities that are securities. There are two sides to the fence. There's the security side, which is stocks, bonds, and mutual funds, and then there's the insurance side. So variable annuities fall into the security side. They are mutual funds bundled on an insurance chassis. They have a lot of fees from 2 to 5%, including mortality and expense fees, administrative fees, fund fees, rider fees. It really adds up, and you're paying these fees whether you make money or lose money, because they are mutual funds that are the heart of them. They can go down and you can lose money. People think that annuities, when you have an annuity, your money is all locked up. No way, Jose. After the first year, with virtually all annuities, you can access up to 10% a year without penalty. Why would you want to take any more? If you took more than 10% a year, heck, in 10 years, all your money would be gone. But if you have something that comes up and you need to access more, you can do that. So that's something that's really important to consider. Some people think annuities are a dead-end street. They don't offer much growth. Well, that's not true either. If you're comparing it to a CD, right now I could give you a 5-year annuity that pays 2.75%. And it's growing tax deferred. If you're in a CD, you're maybe making 0.25% or 0.2%, who knows. And then at the end of the year, you get a 1099 and you have to pay tax on that measly growth. Whereas with the annuity, it grows tax deferred. So that gives you the benefit of triple compounding, because you're earning interest on your principal, interest on your interest, and interest on the money that you would have otherwise paid for taxes. So they do offer growth either with a fixed account, or you can be passively linked to the market with an indexed annuity and have the opportunity to grow based on the movement of the market. You're not in the market. It's not a security. It's just a passive way to measure the growth for your particular strategy. Annuities also have, the index annuities have caps. So while the market's going up, you participate in the growth, but there's a cap on the amount of gain you can have. That's offset by the fact that when the market goes down, you don't lose any money. So you're basically only linked to the market when it's going up, not when it's going down. And what do you have to do if you have money in the market and you want to capture a gain? What do you have to do? You have to sell, right? And then you have to make that awful decision. Well, which stock do you sell? Is it doing well and you want to hold on to it? Or is it going down and you want to hold on to it till it goes back up? You have that emotional decision to make. With an indexed annuity, you don't have to do that, because every year you automatically lock in your gains and they just go up from there. Okay, so that's a misunderstanding too. Some people think that annuities are complicated. Okay, folks, how many of you have mutual funds? Have you ever read through your prospectus from page 1 till the end, which maybe could be 100 or more pages? You want to talk about complicated. That's complicated. There are no prospectuses with annuities, unless they're a variable annuity, of course. The other 3 types of annuities don't have prospectuses because the principal can't be lost. There's no risk with it. They typically have a 2-page summary and disclosure that tells you what you need to know. 2 to 4 pages, that's about it. Some people think that annuities don't compensate for inflation. And that's wrong also, because annuities do give you the opportunity to have growth. And each year you can change your crediting options and where you want to have your money. One of the things that I hear from people very often is, gosh, these are so good. Why doesn't everybody know about them? Why is there so much misinformation? Well, for years leading up to about 2011, last year, many brokerage firms and registered reps didn't have access to most annuities, except for variable annuities. Annuities were viewed by brokers as competition. So it was self-serving for advisors who didn't have access to them to speak poorly of them in an effort to retain their assets under management. You can understand that. Because many advisors didn't have access to or approval by their broker-dealer to offer annuities, they didn't bother spending the time to understand how they worked. It was easier to malign them in an effort to keep assets under their control. As a result of the tremendous losses people have suffered in the market in recent years, many of these brokerage firms have changed their views about annuities and are now embracing them. They need access to a vehicle that protects principal, participates in only the up in the indexes, and then provides an income that can't be outlived. The offering of target-dated mutual funds has not replaced this need. The number of positive articles written about annuities has dramatically increased. Wall Street, however, does not change overnight, so the process is ongoing. How can you learn more? Go to my website, morefs.com. There's also another website that I'm involved with that has a tremendous amount of information called smarterretirementstrategies.com. That's smarterretirementstrategies.com. But the best thing you can do is just call me. Come on in, sit down, let me explain this to you. Let me help you understand what you have now, because frankly, half the people that come in to see me don't even understand what they currently have. Let me help you, and then you can make an informed decision. Well, once again, we're to the end of another show. I do so enjoy having this time with you. I appreciate the feedback I get from you. A big shout out to my clients that are listening, to my friends, and to those of you that have said, gosh, I need to call her and have been putting it off. Don't put it off. Write down this number, 296-4464. 296-4464. Call me. Until next week, stay safe, stay happy. God bless you. Have a wonderful weekend.
You've been listening to Safe Money Strategies with Susan Moore-Vault, president of Moore Financial Strategies. To learn more about today's program or to talk with Susan, call 520-296-4464. That's 520-296-4464. And make sure to tune in again next week at this same time for Safe Money Strategies.
Protecting all you have.